after AMD dropped their Q3 earnings report after the bell, shares dropped down over 7%, at least at the current time. Now, that follows the fact that the shares are up about 4% during the regular trade, and over the past year, shares of AMD are up 72%. Although if you stretch this out year to date, shares of AMD up just 8.5%. Does the drop in the after hours for AMD present a buying opportunity, not only from a fundamental perspective, but from a technical perspective as well? We'll discuss both of those things on today's show. What is going on, investors? Hopefully you guys are doing well out there. Got a semiconductor giant for you today. We've got AMD, and with AMD, we do draw some parallels over to NVIDIA a little bit, maybe even more specifically Intel, which reports their earnings on Thursday. We'll talk about both of those companies, what I think these results from AMD means to them, and obviously what it means to Advanced Micro Devices. We talked about the performance, but the Q3 numbers came in after the bell. Revenue came in about $6.8 billion. That beat expectations, which were right at about $6.7 billion. The high-end estimate was close to about $7 billion or about $6.9 billion. Real tight range as we look forward with AMD. Analysts have this one pegged to a T. Next quarter, 7.2, maybe the high end at $7.9 billion of revenue. Now, the company did give us guidance for that Q4, and it's probably one of the biggest reasons why shares are dropping. Revenue estimates for the fourth quarter from AMD coming in at $7.5 billion, plus or minus $300 million. So the company may be saying as high as $7.8 billion, maybe as low as $7.2. That's a disappointment because the consensus estimate for AMD was $7.55 billion. So their guidance coming underneath the midpoint that Wall Street had set for the company, that's enough to send your shares lower, particularly based on the fact that, again, over the past year, shares were up over 70%. But are the results for AMD that bad? Or was the estimate and maybe the guidance maybe a little bit conservative, at least from the standpoint of AMD? We start looking out several quarters, we have to understand that maybe in Q1, we should have better performance than what Wall Street's expect. And certainly as we get into Q2, maybe in his Q3 of next year, maybe some of AMD's performance could be a little bit better. Now, they upped the guidance on their data center revenue. They also said that they've got key wins inside of the data center. This is traditional CPU data center over at Meta, taking business likely away from Intel. We'll talk about more of that when we get into the segment results for AMD, but let's take a look at it from a broad perspective. Year over year, you added about $1 billion in revenue, $5.8 billion last year, up to $6.8 billion. Even quarter over quarter, a gigantic increase, 5.8 up to the $6.8 billion. They maintained 50% margins. In fact, that's a percent higher than it was just a quarter ago. It's 3% higher than it was a year ago. So they're driving those higher margins. We'll show it to you from a product mix perspective. That data center product obviously comes with higher margin. They continue to spend on R&D, continuing to spend on marketing. We're seeing year over year increases, including quarter over quarter increases. You come down to operating income for AMD, gigantic increase, $224 million last year, up to $724 million. Last quarter was just $270 million. So this company is humming on all cylinders. And some investors might wonder, well, when you start to flatten out the guidance and the guidance isn't over and above expectations, well, has some investors probably concerned maybe, is this as good as it gets with AMD when it comes to revenues, profits, all those types of things? Now, from a balance sheet perspective, nothing to be overly concerned about. I do notice that inventory has ticked up a little bit. That'll impact pricing, probably on the traditional CPU data center client computing as well. We might see some pressure on margins there, but it's offset by the data center margins the company continues to hum out. So cash and cash equivalent are perfectly fine over this company. This is an Intel. They have a little bit of long-term debt, but it's balanced off by more than enough cash. When we get down to cash flows, paints a nice story for the company over the past 3-month period. Year over year, you went from 421 up to 628 million. Now, I know what some of you guys are going to say. We've got a $260 billion company not printing $1 billion to the operating or net side. Also, from a cash flow perspective, just $628 million. So this company is valued pretty well, okay? 47 times forward on the price to earnings, price to sales, just about anywhere you look at it. This company is not undervalued by any stretch. So for it to grow into this valuation, you're going to have to continue to grow revenues, grow earnings, grow cash flows. And that's why when you see a little bit of a disappointment on that revenue guidance, that's enough to send the shares down, at least in the shorter term. Company is not trying to manufacture chips like Intel is. So purchase and property, plant, and equipment is negligible. And so you don't have a lot to do with this cash. So they bought back the shares a little bit, $250 million, not as much as last quarter, and certainly not over the past year. They've actually bought back a little less shares, with shares climbing over 70%. That has some of that to do with it. So you've got a little bit of a buyback over at AMD. Now, here's where things get, I think, a little bit more exciting. If you believe that this company's data center revenue is just going to continue to churn higher, and they even said on the conference call that they've upped their guidance. I think it was $4.5 billion was the guidance that they gave. Now it's up over $5 billion. I think that's for the full year. So they're basically telegraphing what they're going to do in the upcoming quarter. Things look absolutely fantastic. Last year, you had just $1.6 billion of data center revenue. Now we're talking about $3.5 billion. And look at this operating income. Last year, just $300 million. Last quarter, it was just $743 million. And we got the over $1 billion operating income from the data center that we were looking for. That's fantastic. Now, the client computing side actually looks pretty good. Now, will this come at the expense of Intel, or will Intel, when they report their earnings on Thursday, will this be also really good? It's up to debate, but really nice numbers here from the client side as well. $1.5 billion in revenue last year, all the way up to about $1.9 billion. But look at your operating income, ticked up nicely, $140 million. Last quarter was basically a break-even business. That profit has accelerated up to 276. That's solid. Now, gaming revenue, I think we can all expect this to have a decline. The consoles that are in the marketplace, Xbox and the PlayStation 5, these are relatively mature in the marketplace. Almost everybody has bought one at this point. So you're seeing rapid declines there. You won't see a reacceleration in this business to a meaningful degree until there's a new wave of consoles, and I still think we're a ways away from that. The embedded business is your custom silicon business. You did see revenues decline year over year, but it's still a relatively strong profit business for this company. In fact, it's second in line with profit at 372. So you'd like to see some acceleration back in that custom embedded business, because any acceleration in revenue likely means rapid amount of profit. So all things being considered with AMD, the data center revenue number is fantastic. The operating profit number is fantastic. But I think what some investors are wondering is this starting to peak? Is this starting to plateau? Because if it does, there's just not enough left on this business to really support the valuation, at least at the current time. The gaming business is not going to support it. Even the client business is competitive enough with Intel where sometimes there's fluctuations on how much profit you can churn out of that business. I do see inventories ticking up over at AMD as well. That likely means you have some compression, or at least some peaking in the 50% margins that the company reported in the most recent time. Now, I don't think we can read through a ton with NVIDIA, only because they're in their own stratosphere in terms of demand. In fact, in the after hours, shares of NVIDIA are ticking up, likely because it means that NVIDIA's business is not being encroached on at all. The $5 billion or the $3.5 billion of business that they give up to AMD is more or less a rounding error for that company, and just gives data centers some diversification away from the NVIDIA GPUs, which I think when the company reports their earnings in about a month from now is going to be nothing short of spectacular. With AMD, you have a light buying opportunity likely here. I do want to point out that we have a long-term trend that's really been intact for a relatively long time here. You could probably stretch this out to a weekly view and get a very, very nice view. This company's been on kind of this 10-year run, really ever since Lisa Su took over as CEO. you've been rapidly increasing your market share over at AMD. Now, will this like really almost 90-degree uptrend give itself back at some point? You'll have a break of trend. Yeah, probably at some point. But right now, I actually don't see any sign of that. You get pullbacks to that trend, which if it happens in the relatively short time, will take you down into the 140s. Currently in the after hours with AMD, we're sitting right at about 153. So I wouldn't blame anybody if they want to step in on this stock over the short term. This is one of the areas where you could do it. Would I build a full position? If I wanted 10 shares of AMD, would I go out and buy all 10 tomorrow? Absolutely not. You probably buy one or two at this price tomorrow, or a 10 to 20% allocation in this one continues to move forward. You continue to build out that position. You should find support for AMD shares down here in the 140s, maybe even the mid 140s, with the upside back to make a new higher high, but with the understanding that this stock is fully valued. So this company is going to have to deliver well and above expectations. And the fact that they gave guidance for the upcoming fourth quarter, which basically was actually slightly under expectations, or at the very best, right at expectations, is simply not good enough. So you start having to look forward to Q1, Q2, where I think the company can very comfortably come above the expectations already set with Wall Street. That means AMD is a stock you can accumulate over the next quarter, as investors are looking short-sighted to just the fourth quarter, as Q1, Q2 into next year probably actually should be relatively good for the company. That was Advanced Micro Devices. I will likely come back tonight and do a Visa video. And obviously we've got a full week of earnings. Hopefully see you here on the channel. If you haven't subscribed or liked the video yet, I'm not sure what you're waiting for. Get to that, and we'll see you again soon. Good luck with your investments.